Hello everybody, welcome back to the channel. The housing market is crashing and soaring at the same time, and it really all depends of where you live. Basically, the West Coast is crashing and the East Coast is booming. These home prices trends have been driven by mortgage rates, little supply, and the broader economic trends. Now let's check out the Redfin weekly housing data to see where we stand. Now, if we check out Los Angeles, for example, that article couldn't be more right. Look at this. Look at this drop in, this will be the Los Angeles metro area, and you can see 2023 is this blue line and 2022 is this black line, and we are seeing a huge drop right here. Now, if we go over to Atlanta, Georgia, where it's on the East Coast, you can see that the blue line is above last year's prices. This is pretty insane. And here's the difference, though. The main difference is that a house in Atlanta, Georgia, right now is running you $373,000 versus here in Los Angeles, you're looking at $810,000. So you can see how higher interest rates really does influence the market in which you live in, because 6-7% on a 300 almost $400,000 house, it's a lot less than if you were buying an $800,000 house. But again, houses in Los Angeles do seem like they're going up, in line with those summer trends. If we check out Portland, Oregon, look at this. Prices are considerably down. A year ago today, homes were selling for an average median sale price of $543,000, and today they're down to $517,000. Now, if we look over to Miami, which is again on the East Coast, prices are up. A year ago today, a house was $460,000, and now they're going for $491,000. So clearly, the West Coast is getting hammered, yet the East Coast is booming. Now, jumping back into the article, check this out. On the East Coast, east of the Rockies, the only exception is Austin, Texas. 37 of the biggest metro areas east of Colorado saw home prices rise year over year in January. Meanwhile, all 12 major housing markets west of Texas saw home prices fall over the same time period. The article also says such a split in the U.S. housing market is unprecedented. In the U.S. housing crisis of 2007 and 08, home prices dropped in 134 out of 153 metropolitan areas, and select few pockets of strength saw home prices stay essentially flat, not rise like they are today. We've never seen anything quite like this, where it's so stark west and east. Now, a lot of this is driven by the number of factors that stem from the COVID-19 pandemic, which saw a boom in housing demand at a time when supply of homes was very limited. Again, that's what ended up happening. We had such a low supply, plus we were shut down for a while, and then you add basically 0% mortgage or 0% Fed rate, which translated to about 2 to 3% for mortgage rates. And the people that couldn't buy a new house, they ended up refinancing. But the few people that were left to buy homes, they were the ones really to drive the prices so high. Now the problem right now is that with interest rates being so low and so many people refinance, nobody is itching to move. So the tight supply again is keeping houses super high. But what we're seeing on the West Coast is that in general, prices are so much more expensive than in the East Coast. I think there's still a lot of migration happening, and people here, like you saw in LA, the median house price is like $800,000. When you add that with that high interest rate for the mortgages, it just becomes really unaffordable for a lot of people, versus you can still buy affordable housing, like they said, east of the Rockies. Now, this is what to expect. The pain seen in the West Coast housing prices might take time to spread to the East Coast, and if it does at all, given that the supply of homes remains extremely limited. At the same time, Millennial generation and Gen Z represents a large swath of prospective buyers that could help any future price declines limit it. So again, we're still looking at a tight supply. If you're looking to buy a house and you could get into it right now, it's probably a good idea, because it looks like we are not going to see a housing crash anytime soon. Unless the feds really raise those rates, which now they're scared to do so because we've seen some bank failures recently, and now they're basically pulling the gas off that Fed rate hike, and they're slowing down, which means more buyers are jumping into the market. And unfortunately, with the supplies being as tight as they are, we are going to either see prices climb or definitely go sideways. But I don't think we're going to see a crash anytime soon. Definitely not this summer, as we all know that during the summer prices tend to go up. It is year over year. That's the trend that we've always seen in the housing market. So getting in before that summer rush might be a good idea. Or if you're really trying to save money, you might have to wait till about November, December of the end of the year to really see those prices drop a little bit. But again, right now with tight supply, it looks like these prices are going to stay pretty high. Now, yes, we have seen prices decline on the West Coast, but again, we are coming out on the West Coast, we're coming out of huge highs. So we're going to have to see a lot more price decline in order to make it affordable for the average person to buy a house. Now, I'm going to go ahead and finish this video. Thank you guys so much for watching. I love you guys, and I'll see you on the next video.